Alright guys, so JB here. So I don't know what's going on. I think this is just because this is just the first live stream that we're doing. I think that's the reason why it is being a little harder. I didn't live stream before, and this is actually the first time that I do this, and I have to say that it is not cool. It is not very easy, but I think it's a great opportunity for many people like new traders to learn how to trade. So let's do this. Let's take a look here and let me share this link. Alright guys, so I think this is not a very straightforward task. Live streaming is not so easy. I think that it's just the first time, and first time is always, the first time. So anyway, while we learn about how to live stream, we can also learn how to trade, right? So we have to make sure that we trade appropriately, and that's the most important thing. So I was going through a very quick analysis throughout all of these pairs. A very quick one, an immediate analysis, just to make sure that we're not losing any type of trading opportunity as of right now, right? So later on, we're gonna discuss a little bit about how to draw the key levels and how to make a top-down analysis from the daily to the 30-minute time frame, right? So we go from the daily time frame to the 30-minute time frame, and we're just gonna be waiting for a little bit of um, opportunities to trade over here. All right, so we have this pair, the Euro USD in the daily time frame, and from here we have a very clear movement. This, I mean, this chart personally I believe is very clean. It has um, it has some important and specific pivot points. So from here we have to make sure that we draw our pivot points appropriately. So how to draw the pivot points appropriately? I mean, how to draw key levels appropriately. That's very, very important because of that, many people can't find success in trading. And it's not because it is hard. I personally believe that drawing key levels, it is not hard at all, right? And what I think is that many traders they make it a lot harder for themselves than how it is. So for example, drawing a key level over here, it's not hard at all. How can I draw a key level? Just joining the pivot points, right? So what a pivot point is, this one is a pivot point, this one over here is a pivot point, this one over here is another pivot point, right? So hard, it is not hard at all. You just have to join the pivot points. So let's draw over here just to make it a little bit clearer for you guys. So this is a pivot point, and this is another pivot point, right? So we could call that a support. That's pretty much it. That's that's all the matter. So okay, for example, this one over here is a pivot point, this one over here is another pivot point, this one, this one, this one. So we just have to join them, and then we're gonna start finding the right key levels. So for example, over here we have, let's say, a downward trend, right? Something like that. And we have three pivot points, which is this one, and this one. So what we want to do is we just want to join them, or to find a level, a specific line that's going to touch all of those pivot points. So the more pivot points that you can touch with the same line, the stronger that key level is going to be. All right. So for example, this one over here would be a very important trend line. Something like this one. Look at this one. That was an important trend line. You touch the price here, 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 and here. Can you see that? Over here we have another one. Look at this one. It touched the price here, 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 here multiple times, here, and here again. So there are multiple pivot points touching that trend line. So that is the reason why, and that was a key level, right? I mean, this trend line over here is a key level. So that's pretty much it about how to draw the key levels, just joining the pivot points. That's it. I mean, don't make it harder for yourself than how it is. So it's a lot easier than what you think, right? Now let me just 1 second. I'm just gonna share this over here. All right, so let's move forward. Okay, so we have these key levels, right? So again, drawing key levels is very important. And if you don't know how to draw key levels, then it's gonna be a lot easier, a lot harder. Sorry, it's a lot harder to spot the right entries. All right. Okay, so let's do this. Let's move forward. Okay, so we have this specific chart, and let me just show you guys my key levels. My most important key levels. These are the ones that I draw already. So those yellow lines are the ones that I consider the most important from the daily time frame. So from that time frame, I know that those levels are the most important for me. So now what I want to do is I just want to go to the lower time frame, right? And make sure that from the lower time frame, I can find out what the best entry points are going to be. So for example, look at this trend line over here. Let's draw here. So for example, we have this trend line which is being touched here, here, here as well, here, right? So that's a very important level. This trend line is an important trend line. All right, so every time that the price touches the trend line, it's going to have a reaction, right? That's what I know. Again, this is the daily time frame. Okay, so I know that every time that the price touches that trend line, the price is going to have a reaction. Now, what am I going to do? I'm just going to wait for the price to touch another key level and have another reaction. And then I'm going to take advantage of that reaction and I'm going to make money out of trading. It's not very hard to understand. Personally, I believe it's very straightforward. Remember, a support can become a resistance, and a resistance can become a support. So, for example, if I do have something like this, right, which is a downward trend, I also have horizontal levels, right? This one over here was a support, and then it became a resistance. It was a support, and it became a resistance. So what do I have to do? I just have to wait, and that's the hard thing. I think that's pretty much what makes trading very, very hard, which is waiting or being patient. So what do I have to do? I just have to wait until the price touches that important key level. So when I have the price touching an important key level, I just gotta wait and make money out of the reaction that the price is gonna have in that level. Let me just show you an example. So for example, here we have this yellow line, this horizontal yellow line, which was a support here and resistance here, right? A little bit of a support down here as well. So then look at this, the price came all the way down, touching this trend line again, and regardless of this important momentum that the price had, I mean the price was just coming all the way down, when it touched the trend line, it went again to the upside. Can you see that? So it went to the upside, and then the price created this a little bit of pin bar. I mean, we had three pin bars over there. So those pin bars are rejecting that yellow line, and that's the candlestick pattern that I would be waiting for to join the sellers that were pushing the price from before to the downside. So these sellers were pushing the price downward, and when the price touched this trend line, this important key level, those sellers they cashed out, they took profits, pushing the price to the upside, creating this pullback motion. So pullbacks are created because the buyers or sellers are cashing out. So in this case, they were cashing out, they took some profits, creating this little bit of a pullback, and then we had this this reaction to this key level. So that's what we were waiting for the price to keep coming down and join those sellers and make money out of trading. It's not very hard. I personally believe that the hard part is to wait. I mean, if you're able to wait until that happens, then you're going to be able to make some money out of trading, right? Okay, so from here, from the daily time frame, we have some of those important key levels, right? I could say that this is also an important level. Let me draw it for you guys, and this is just for you to know how I do it, right? How I personally do it. Look at this. So from here, we have some important touches in that specific key level. So let me show you why is that a key level. Look, it will say resistance here, resistance over here. It will say support here. This is just a false breakout, right? It will say, look at this, is resistance over here and resistance over here. So most likely, I mean, I am 99% sure that when the price touches that level again, it's going to have a reaction. Maybe not in the daily time frame, but in the lower one is definitely going to have a reaction. And I'm going to be waiting for that reaction to make money out of that. I mean, out of that movement. Does it make sense? All right, so let's go to the lower time frame here, which is the 4-hour time frame. So from here, from the 4-hour time frame, what we have here is a lot clearer movement, right? So this is a very clear downward trend. And why is this a downward trend? Very straightforward, because it has lower highs and lower lows. That's pretty much it. So for many people, it's very hard to identify trends and to identify what's going to happen. I mean, when the next pivot point is going to happen, when it's going to be located. And in reality, it's not hard at all. Look, this is an important level, right? This is another important level. So we had kind of like a channel over there. And this is a lower highs and lower lows structure. Can you see that? Lower highs and lower lows. So if we have that type of structure, we know that we have a trend, right? This was our horizontal level. It was respected here, here, and here. Can you see how the price respects the key levels? So those are the ones that you're looking for to open a position. You cannot open a position if you cannot spot one important key level. So for example, that one, this was a support here, resistance here, and support here. The price went up. When we had the breakout, we had a retest and pullback in reaction to the downside. another breakout, and then a pullback in reaction to the upside. Now the price in this case was also rejecting this trend line, and the price just went up. So here I didn't need any type of indicator. I didn't need the 21 moving average. I didn't need the Bollinger Bands. I didn't need the Fibonacci levels. I didn't need anything, right? I just needed how to draw. I just needed the knowledge about how to draw key levels, right? And this was the pivot point that I needed to wait for, right? And as soon as I identified this pivot point, then I could believe, okay, the price is just gonna go up. And it did, right? It did. So it's not hard at all. And some of you guys can say, okay, but this was an upward movement against the downward trend, right? And which is totally valid. I mean, I do believe that. Yes, definitely this is a bullish momentum or bullish, I mean, it would be a bullish opportunity in a downward trend. So you cannot fight the trend. But something that we have to consider in here is that this is the breakout of the trend. So if we have a trend, something like this, right? On a structure of lower highs and lower lows, right? Which is kind of like a channel. And then we have a breakout of that channel, then we can believe that we had the end of that trend. So that was the end of that trend and the beginning of a new one. Does it make sense? So what we have to wait for is for the breakout of that channel and retest, which is what happened here, right? We had the breakout and retest and the price went up. Now, look at this. No, that was not the one. There it is. All right, so look at this. When the price broke that trend line to the upside, the price was already creating a new structure, which is a higher highs and higher lows structure. So from here, look at this. This was the resistance. What am I waiting for here? This is, again, this is the 4-hour time frame. What am I waiting for here? I'm waiting for the price to come all the way down, reject this previous resistance, right? Which is my next key level or my most immediate key level. And then what I'm going to do is I'm just going to open a position to the upside. That's it. I don't need any type of, again, any type of indicator. I don't need to be, I don't know, super genius to know how to open a position, right? I just need to know how to identify key levels. And I do believe this is just like a child's game, you know, when you were a child and you were learning how to draw or how you write or something. There are like bears or kind of, I don't know, like funny drawings, and you just have to join the points or join the numbers. And at the end, when you join all of them, then you have I don't know, a drawing like a bear or something. Well, it's pretty much it. It's very much like that. So this is an important key level right here. So this is a new trend. I will be waiting for the price to create a rejection of a key level, and then I'm just gonna join the buyers to the upside. It's not hard at all. Why would I do that? And this is why we have to make a top-down analysis. If we go to the daily time frame, we can see how the price is just going up. Again, look, this is a pivot point right here. Can you see it? Let me just show it to you. Right here. This is a support. And this is another one, this yellow line. So the price has already created a breakout of that level. And in the lower time frame, that is exactly the same breakout of that trend line that we had already drawn here. So we had the breakout and the price is creating this high over here. So I'm just going to be waiting for the price to come down, create a lower high, and then I'm just going to join the buyers. Does it make sense? Does it make sense? I hope it makes sense. It's not hard. So this is just about key levels, but we have also to discuss about candlestick patterns, right? Confluence factors. So I need more things to increase the probability of my setup. So key levels are just one of those factors, right? All right, so from this time frame, from the 4-hour time frame, I would be looking for buys. I wouldn't be looking for sells, right? So this was, if you want to see it this way, look, let's keep drawing. So this was a double bottom structure. Can you see that? This was the key level that I was talking about. Double bottom, this was the neckline. This line, which was a support here, a support over here was the neckline, right? And the price rejected the trend line over here and it went up. That's great, huh? And this was a great opportunity for us to make money. So this was the opportunity for us to join those buyers, right? So we had multiple confluence factors. Which ones? This was an instructor, or you can call it whatever you want. This was just a double bottom and or just a breakout and retest pattern, right? And the price is just going up again, reaching the previous support. So this opportunity down here was very clear for the ones who were awake at the time. That was the opportunity to join those buyers. So why would have I done if I would have been, at the charts at the moment? Personally, I wouldn't have opened that position, not because it wasn't there, but because I'm looking for other confluence factors. This was um, a trading, method, or, those who trade based on trading patterns. You can call it just a trading pattern, which is the double bottom one, right? Something like that. So you have the double bottom, double one, I mean bottom one, bottom two, and the neckline. So then we have a breakout and then retest, and you buy the retest, right? You buy here. So this is what happened. You just join those buyers. This is exactly what happened. But personally, I would have been looking for something different or for something else. So I wouldn't have just be looking for the pattern itself. I should have been looking for something else, which is the candlestick pattern. So what's the candlestick pattern? We're in a specific candlestick pattern showing me that the price was just gonna go up. For example, something like this, which is a pin bar, right? So if down here I would have had a pin bar, right? Then I would have believed, oh, okay, this is kind of the right opportunity for me to go long. Something like this, right? Right, a candlestick with a long wick rejecting that line. Then I would have thought, okay, that's my opportunity to join those buyers and make money to the upside, right? Which is what happened, what didn't happen over here. There was no candlestick pattern. I personally trade only with candlestick patterns, right? I mean, only when I have candlestick patterns in other confluence factors. So for example, here we didn't have one, at least not in this time frame. Now let's go to the lower time frame and see what happened. So from this one, well, I wouldn't believe that this was a clear opportunity in this time frame because of the same reason. We didn't have a clear candlestick pattern to join those buyers, right? So in this time frame, again, I'm looking for buys. In Euro USD, I'm looking for buys. Why? Because we have these higher highs and higher lows structure. That's pretty much the reason why. And because in the daily and the 4-hour time frames, it looks like a buy. That's it. So if I trade the 30-minute time frame, I would be looking for a buy down here. So as soon as the price comes down and creates a lower high, then I'm just gonna buy, right? Okay, so again, first of all, we go from the daily time frame to the lower time frames, making this map, drawing this map, having an idea of what's going on, of what's going to happen, and then I have to make money out of that movement. So for example, in this one, we know that we should be looking for buys. I shouldn't be looking for sells unless it's a very short sell, right? Something like this, like I don't know, like 6 pips stop loss to make 12. That would be the one. I mean, something very, very small. But the problem is that this would be counter trend. Well, there are multiple problems. The first one is that this is counter trend, which decreases dramatically the probability, I mean, the winning probability of this trade, right? So first of all, that's just one reason not to open a position. But anyway, let's say that you like to trade against the trend, which is something that new traders love to do, right? Trading against the trend. Now, let's say that we are going to open up a trade, a position over here to make money out of this movement to the downside. What do I need to do that? I need a clear confirmation that the price is just going to keep coming down. And how does that confirmation looks like? Let me show you guys how it looks like. Something like this. This would be a support. And if we have a clean breakout of that support, rejection, I mean pullback and rejection of that level, then I would go short here, right? I would open that position, something like that, risking 6 pips to make 12. That's what I would do, right? If I was gonna trade counter trend, and I'm not gonna do that, right? Which is something that you should be doing as well. Just don't fight the trend. All right, so from here, let's take a look at what's going on. We have already gone through this top-down analysis, and we know that we should be looking for buys in Euro USD and not looking for sells. So from here, what am I gonna do? I'm just gonna be patient. I'm just gonna be waiting for the right opportunity to go long here. So for now, I'm just not gonna do anything. All right, I'm not gonna do anything. I'm just gonna wait until the price comes down and provides a clear rejection of these levels, right? That's it. Make sense, guys? Do not open any other position in here. So I was saying when the price reached this resistance, I told you guys do not open any position, right? Told you guys do not open any position to the upside or the downside because the price has already touched or reached a resistance. So when the price reaches this resistance, the banks or the investment funds or huge hedge funds or the bigger or the biggest financial institutions, the ones who are actually creating this movement in the market, they start cashing out. They start taking some profits at key levels. So if they're pushing the price up, they're gonna take profits at resistance, which is gonna create this pullback. So if you go long at a resistance, you're just gonna lose your money, right? So something like this. Oh, the price is just going up. This is a bullish engulfing candle, and I'm on a scalper, so this was a resistance. The price created this breakout, and now this bullish engulfing candle. So I'm just gonna wait for a retracement. I'm gonna put my stop loss below the low of this engulfing candle, and I'm gonna just make double of what I'm risking, right? So I'm 100% sure that many traders did or made this analysis, right? I'm just sure this happened. And they lost their money. Why? Very straightforward. This was just a high. This was just a freaking high, right? The price touched this resistance and that's it. When the price touches a resistance, it creates a reaction, which is a pullback. Why? Because the buyers are cashing out their profits. They're just taking profits. So again, because of that, many people lost their money. Remember, every time that the price moves, money is being made and taken out at the same time, right? And most likely the ones who are losing their money are the retail traders or small financial institutions. All right, so from here, I'm just waiting for a good opportunity to go long, right? Go long, but not high, right? We just buy low and sell high. So I'm just waiting for the low to buy. That's pretty much it in Euro USD, all right? Okay, so again, guys, if you have any type of chart or if you have your own analysis, send it over, right? Send it to us. You can just click over here, right? Let's take a look. copy link, right? And you can send it over in the chart. And I'm gonna open that link and we can take a look and you can get some type of feedback, all right? At least I'm gonna provide you guys the feedback of what I would do, all right? I'm not gonna say that I'm the only one who trades appropriately, and I'm not gonna say that you're gonna get rich tomorrow if you do what I do. All right? This is how I trade, and I know that this is a successful method. So this is just pure price action. I know that it works. I'm not just gonna sell myself as a freaking trading guru as the ones that you find in Instagram. All right? Let me 1 second. Okay, so again, if you have any type of analysis or chart, send it over and you can get some feedback. Okay, so let's go to AUD USD. Look, just I would say 30 minutes ago, I was saying that this was going to happen. Again, not because I'm a wizard or because I'm a freaking trading guru. No, it's just because it's freaking basic, right? If the price is going up and it creates an order block like this one or a little bit of a consolidation period, it's because most likely that's the end of this upward or most immediate upward momentum, right? And now the price is coming down. Why? Again, because those buyers who already made profits with this movement are cashing out. Now the price is just gonna come down, and what I would do here is I wouldn't sell, even though I believe the price is gonna keep coming down. I don't know how much. So what I would do is I would be drawing or identifying the key levels. For example, this is an important resistance and this is another important resistance, right? So I would be waiting for the price to come down and reject that resistance or this one down here. And if that happens, then I would go long, something like this, right? And this is when I need a candlestick pattern, or like this one. That's it. Does it make sense? That's pretty much it. So I was saying this movement to the downside is going to happen. 30 minutes ago, I was saying do not buy here. The price came down. Same thing here, right? Don't sell here. You can't sell because what's going on in the USDCHF, it's exactly the opposite of what's going on with the Euro USD. So if I believe that Euro USD is going to come down, well, USDCHF is going to go up, right? So let's make a top-down analysis over here from the daily time frame. All right, so first of all, what's a top-down analysis? A top-down analysis is just an analysis that you make from higher time frames to lower ones or to the one that you use to trade, right? To make sure that the probabilities, the market, the main trends, all of them are in your favor, right? That's how you increase the probability of your setup. That's how you increase the probability of making money out of trading, right? So again, you go to higher time frames like the daily one and you start going down, right? So for example, here we have the daily time frame of the AUD USD. So let's draw some key levels. How would you draw your key levels, guys? Do you have, well, I think the question is, do you actually have key levels in your freaking charts? I think that's the question. For example, this one over here is a pivot point and another here, right? Let me change this color. Okay. So that's a support, something like that. Why is it support? It was resistance over here. It was a support here and a support here. So this is an important key level. And for me, it's a very important key level because this is the daily time frame. And if I trade the 30-minute time frame, when the price touches that level, that key level, in the 30-minute time frame, I'm going to have a reaction, right? I'm 99% sure that I'm going to have a reaction to the upside, right? When the price comes down and it touches that level, I will be looking for buys, right? So that's pretty much the reason why we have to make a top-down analysis. Now, let's take a look at other important key levels. Look at this. This is a very important resistance, right? Very important resistance. The price is touching that resistance here, 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 here. Look how many times the price has touched that resistance. That's a very important level. Look at this one. That's an important support, right? Like we will see support here, it was support here, it was resistance here and here as well. So that's a very important level, right? Very important level. This one over here. Look. And now we're right there. Look at where we are right now. And that's why the price is coming down. And that's what I'm talking about, guys. That's what I'm talking about, drawing your freaking daily levels. Because when the price touches those levels, then you know that you're going to have a reaction, right? Then you know, okay, if I'm going long, for example, those who were going long here, they should be, I mean, they should have taken their profits when the price touched that level, right? They should have taken their profits, because if they didn't, well, the price now is having a reaction in the 30-minute time frame, right? So again, this is let's take a look here. So this was a support here, resistance here, support here. This, I could say this was just a false breakout, right? A fake out. Support here, so that would be another key level. Does it make sense? That's how you draw your key levels. It is not hard. I mean, I think I could be looking for that. Let's see if I don't know how that would be called. Something like what? What do you think? It's something like join points. Look at this. This is how you draw key levels in trading. Look, if you did this when you were a child, look, you can draw key levels in trading, dude. This is why I just cannot believe that people cannot draw Q levels. This is how you you draw Q levels. You just have to join freaking points, right? So for example, here you had the numbers 10 to 11 to 12 to 13 and then 14 and then 15, right? I think we all did this when we were kids. So that's pretty much what we do here. We just have to join pivot points, right? From left to right, right? So if I have these pivot points, I would be 1, 2, 3, 4, 5, 6, right? Those would be my pivot points. I just have to join them. Now let's go to the lower time frame. This is the daily time frame again. Daily time frame. From this time frame, what do I have here? I have a very strong bullish momentum, right? Now the price is reacting to that level, so I would be waiting for, I don't know, a candlestick that's kind of bearish, but I don't know, maybe a little bit of a retracement, but with this momentum, the price might break that resistance and reach the next key level, which is this one, right? But for now, I would be waiting for sales. I mean, I would be looking for sales. Why would I be looking for sales? Well, very easy, because the price has touched that level. That's the reason why. So if I clean all of these levels and then I go to the 4-hour time frame, this is where the price is at right now, right? This is the resistance that we had drawn already, right here. And now the price is having a reaction in the 4-hour time frame. This is an inside candle, right? This is an inside or baby or harami candle, right? Now let's go to the lower time frame, the 30-minute one, and this is just a consolidation period. So with this consolidation period, look, what I would be waiting for would be something like this. This is an order block or consolidation period, which suggests the end of this upward movement. So what I would be waiting for would be something like this. A clean breakout of this support and then a retest, and then I will go short here. That's what I would do. All right. And I'm not saying that the price cannot keep going up. Yes, the price can keep going up. But now I just need to wait. I just need to wait for a clear confirmation, right? So I wouldn't sell now because I need to have this confirmation when we have this breakout of this support and this retest, right? So when I have that, then I would be looking for sales over here, right? So how would that sell would look like? It would be something like this, right? My stop loss would depend on the candlestick pattern that I have. For example, this right here is a bearish engulfing candle, right? So let's say that my stop loss is just like above it and take profit would be 2 to 1, right? Like 22 pips, which is very likely to happen. Why is it likely to happen? It is likely to happen because of the daily time frame analysis, and because if I have a clean breakout and retest, that means that the price is going to keep coming down. And the next important level is this one over here, this kind of white line. So if my take profit is it's actually higher than that resistance, or my next support in this case, most likely I'm going to be reaching that level, right? Does it make sense? I hope it does. All right, so that's what I would be waiting for, right? Otherwise, what's the other scenario that I would be waiting for if I do not have this breakout? Because that's the other option. If I do not have this breakout to the downside, then it's going to happen to the upside, right? Something like that. And if that happens, exactly the same thing. I would be just waiting for the pullback, rejection of that broken level, and then I would go long, right? So that's what I would do. So I'm just waiting for a clean breakout and retest. And then I'm just gonna join either the buyers or the sellers, and I would make money with that movement. But again, my bias is bearish. So I personally believe that the price is just gonna keep coming to the downside or down, and then it's gonna create this retest and pullback, and I'm gonna join them to the downside. All right. Okay, so that's pretty much the analysis here in the AUD USD. However, I have to say that this is a very strong momentum to the upside, right? So I would be only waiting for sells in that case and for buys down here. So if down here I have a rejection of that yellow line, sorry, kind of white line, I would go long with them. Okay, makes sense, guys? Please let me know in the comments if this makes sense, because otherwise I wouldn't I would have to explain in a different way. Okay, so now let's take a look at the USDCHF. So now in the USDCHF, the price is creating this pullback. Okay, so I would be looking for sells, right? I'm looking for sells here, and I'm just waiting to see what's going to happen. This is a very clean, bearish structure, creating lower highs and lower lows in the higher time frame. In the lower time frames, we can see this bullish trend, and now just had the breakout. We just had the breakout of that trend line, retest, and the continuation of the price to lower levels, right? So let's go again to the daily time frame. I think that by now you already know how to draw your key levels, right? So USD-CHF, this pair is a very good pair to trade because this pair respects a lot those key levels. Let me just show it to you. No, that's not the one. Quick. So I have this trend line, right? I also have that previous resistance, right? I also had that resistance which became support. So when you start drawing your key levels, everything becomes a lot easier. So when you draw your key levels, you start drawing your map, right? So from this perspective now, just by those lines that I just draw, for me, this looks like a sell. I would be waiting for sells, right? So everything looks like a sell, right? This was a triangle, an ascending triangle. This was a consolidation period. You can say that this is a head and shoulders pattern, right? Look at that. Head, left shoulder, right shoulder, breakout, Now we're having the breakout. So I would be waiting for sales in the daily time frame. So those of you who are swingers or swing traders, you would be waiting for sales, right? So a rejection of this broken level to join the sellers, right? At least until this next support, till here, right? So from this time frame, I already know that I'm looking for sales. However, before that happens, I have to wait for this pullback in rejection of this level, right? So if I have that, then I would sell. Now, let's go to the lower time frame and see how it looks like. If I go to the 4-hour time frame, what do I have? I have that same, bullish trend, right? Bullish trend and then a breakout. So for example, let me just show you guys my levels. So these are my 4-hour time frame levels. This line is from the 30-minute one. I'm not gonna erase it. I'm just gonna leave it there. Okay, so we had this bullish trend, consolidation period, breakout to the downside, retest, and then coming down again, right? That's very straightforward. Nothing to do if you don't have a clear confirmation like this one, right? Look at this confirmation of sales. Why is this a confirmation of sales? Let me show you guys why that is a confirmation of sales. So we had this, trend line, this bullish trend, and from here, look at that support, right? This was a resistance. The price broke to the downside, retest, and look at this rejection candlestick. Very clear and clean bearish engulfing candle. Can you see it? I mean, is it easy for you to spot it? Is it easy for you to see it? So that's a bearish engulfing candle, and that bearish engulfing candle is just telling me, okay, this previous support is now becoming a resistance, and those bears or those sellers who were able to push the price down are again gonna push it down, right? So that's the story of this bearish engulfing candle. So this bearish engulfing candle is telling me, yes, you gotta sell, right? Because this is the retest and confirmation for you to sell. Now let's for fun, just for fun, let's take a look at the Fibonacci levels. Look, that bearish engulfing bar, this bearish engulfing candle is also rejecting. This starts to look messy. Let me 1 second. Okay, so that bearish engulfing candle, this one over here, let's make it bigger. This one over here is rejecting the space between the 0.5 and the 0.618 levels of the Fibonacci levels, right? Which are the most important ones. So I had multiple confluence factors to open this position to the downside, right? Multiple confluence factors. Which are those confluence factors? In itself, the bearish engulfing candle is a candlestick pattern, right? So that's one of them. The key level, which was here was a support becoming a resistance. That's the second one. The third one is just the distractor, which is breakout and retest, right? And we also had a good risk to reward ratio, right? So that's the reason why this one was a good opportunity. So when you trade, you have to look for those confluence factors. Now again, that's the reason why this was a good opportunity to go short. Does it make sense? Okay. Now let's move forward. So we had this bearish engulfing candle. The price just came down. What am I looking for in the price now? What am I looking for? I personally am looking for sales, right? I am looking for sales. But those sales are not going to happen right away. Maybe the price can drop all the way down now, right? The price can just melt down, but I'm not going to be waiting for that. I'm just going to be waiting for the pullback or the price going up, and then I will be joining those sellers to the downside, right? That's what I would be waiting for, at least in this specific time frame. But if we go to the lower time frames, it's exactly the same thing. The price is just coming down. The sellers are pushing the price down. This is a lower high. I mean, lower low, lower high, lower low, right? We're gonna have another lower high, and then that's the one that I'm talking about to join the sellers to the downside. When that's gonna happen or where that's gonna happen, that's a great question. I don't know. That's why we have to draw the key levels and identify where that could happen. For example, here, right? That would be massive. So if I have a rejection of that yellow line that you're looking at right now, I would open a position, right? Definitely. I would open that position to the downside, okay? However, that lower high can happen, I don't know, maybe here, maybe right there is the lower high. This is an inside candle, right? An indecision candlestick pattern. And this is a key level. Look at that. It was a previous support. Can you see that? So this one was a previous support, a previous pivot point. The price broke below it. Now it's retesting that level, and now it's providing an indecision candlestick pattern, which is the inside candle pattern, right? So the price can melt all the way down from here. But personally, I wouldn't sell, right? I would be waiting for I think this pattern or this specific setup would have a higher probability if the price goes a little higher, all right? I think that the buyers can push the price a little higher. And if that is the case, well, I would lose this position, right? The price would touch my stop loss, which is another very important thing. If you're gonna trade, use a stop loss, all right? Always, always, absolutely always remember this. Absolutely always use stop loss, all right? Absolutely always. There is this guy who sent me a message saying, "Hey, I want to learn about price action, and I found out that your page is a really good page about price action, and I would like you to teach me how to trade price action." And I was like, "Dude, absolutely. Just take the price action master training. It has all that you need to know how to trade with price action." And the guy was like, "Oh yes, but yeah, I need your help now because look at my account." And he sent me a screenshot of his MetaTrader 4 terminal, right? And he had like 7 positions opened, and all of them were losing like $90. And I was like, "Dude, just close those freaking positions." And he was like, "No, I just I just prefer to leave them open, and if I'm losing too much, then I'm just gonna close them." And and I thought, dude, that doesn't make sense at all. And I told him, dude, just use always a freaking stop loss, and if it touches your stop loss, that's okay. All right? That is okay. That's totally fine. I mean, if you have a losing trade, that's totally fine. That's not a sin. I mean, you're not a wizard to know exactly what's going to happen. That's exactly the reason why you gotta use stop loss, and that's exactly the reason why you always need um, to risk only what you're willing to lose, what you can afford to lose, right? So that's what I told him. And the guy, what did the guy said? The guy said something like, "Oh no, I just rather to move forward with this method. I mean, I just rather to do it my way." I was like, "Okay, just keep losing your money, right?" So always use your stop loss. All right, so from here, I think the price can break above this resistance. So that's why I'm not gonna open this position to the downside. I'm just gonna wait. But again, I'm waiting for sales here. I'm just waiting for a good opportunity to go short. So maybe there is another level on the left. Look at this. On the left, the price can come all the way down to this next support, right? Look, which is actually an important level. All right, so from here, we'll be only waiting for sales. And if I have a good opportunity to go short, that would be a nice take profit, right? So from here, that's how I see it, and that's what I would do. All right. If you trade, let's go to the 30-minute time frame. This is specifically the time frame that I trade, that I personally trade, the 30-minute time frame. All right, if you trade a 15-minute time frame, you gotta make sure that you're willing to lose your money because that time frame is a low probability time frame, right? So the 15-minute time frame provides very low confirmations. I mean, very weak confirmations. Okay, so make sure that if you are gonna trade the lower time frames, like the 15-minute time frame or the 5-minute time frame, you gotta know how to trade, right? You already have, you already need a successful method with you. Otherwise, you're just not gonna be profitable. Okay. Okay, so that's what I'm waiting for here. Look, this is the 21 moving average, right? Touching those candlesticks. So if by any reason I have a clean, pin bar or bearish engulfing candle here, then I would open a smaller position here. Something like this, like a 2-to-1 trade. Okay, but only if I have a good candlestick pattern, right? Like a bearish engulfing candle, or like a pin bar, or an inside candle, or maybe a fake setup. If I do have those, then I would open this position to the downside, okay? Which would be a smaller position, right? A very tight stop loss, but a take profit that's at least 2-to-1, right? So if I'm gonna risk 5 pips, that's because I'm gonna make 10 pips, right? Okay, so that's what I'm looking at right now. That's what I'm waiting for. Personally, I believe that this resistance can be broken, so that's why I'm not opening this position. And if it gets broken, then I would be looking for sells up here, right? Okay, so the New Zealand USD, look, at 6:30, no, sorry, at 7 in the morning, look at this candle. At 7 in the morning, I was telling you guys, and you can just go back, not in this video, but in the previous one. At 7 in the morning, my time, right? You can see it in my screen. I was telling you guys, do not go long, right? Let's go back in time. Look, so we were here, and everything is bullish. And I told you guys, do not go long. Why? Because the price is just gonna fall, all right? Why is it gonna fall? Because this momentum to the upside is just over. Why is it over? Look at that resistance. This is a resistance, and this over here is an order block or consolidation period, right? So this is a consolidation period, and because of this consolidation period, I cannot open any position. Because when you have a consolidation period at the end of an upward trend, that means that that trend is over and that a new movement is going to happen in the opposite direction, which is what happening here, right? The price is creating higher highs and higher lows, right? And created this order block right here and this resistance. So most likely the price was just gonna keep coming all the way down, right? Maybe not, maybe this is not gonna change the whole direction of the trend, right? Maybe this is just gonna create a pullback and the price is just gonna keep flying, right? From here it's just gonna keep going up, which is what I believe is gonna happen. But I told you guys, do not open any position to the upside, right? Now let's see what happened. So what happened was that the price just came down. Can you see that? And it can keep coming down, right? So what am I gonna do now? I'm not gonna do anything. That's what I'm gonna do. Nothing. I'm just gonna be waiting for the price to create another very important rejection or pivot point. And when I have that pivot point, then I'm gonna join the buyers to the upside. So those buyers who were able, I mean, those buyers who were able to push the price to this high are the ones who can also push the price all the way up, right? Again, all the way up till the next resistance. What's that resistance? We're gonna take a look at that. But first of all, we are only looking for buys here. When would I be willing to look for sells? If I have a new structure of lower highs and lower lows, right? So if I have such an structure of lower highs and lower lows, then I would open a selling position, something like this, right? If I have that, then I would be looking for sells. But for now, this is just an upward trend, and we're just creating this pullback to go long, right? Okay, so now let's make just a top-down analysis here to see what's going on. Look at the momentum here. Look at this momentum. The buyers are just pushing up, right? They're just going up. But this is our resistance, right? Can you see it? Again, this is what the heck is that? Frick. Okay, so look at that. This is a clear resistance over there. Again, this is the daily time frame. I don't know how to stress this out, but if you take a look at the daily time frame, and if it goes in your favor, then you're going to increase the probability of your setup. Okay, so now the price has touched that previous resistance, right? And now it's having a reaction. Now the price is creating the pullback. So that pullback can be just a little bit of a, I don't know, of a reaction, and then the price can keep going up. Or maybe the price is just gonna keep falling from here all the way down, right? Those are the probabilities. We don't know what's gonna happen. Unless someone is a wizard, should be a rich wizard, right? Okay, so anyway, now the price is just having a reaction of that resistance. From here, what I'll be waiting for is just for the price to keep coming down. I mean, this candle, this current daily candle, is gonna look more like this one, right? More like this one. And then I'm gonna be waiting for, I don't know, some type of movement to the downside, and with this momentum to the upside, we might have the breakout of this resistance, okay, to the upside. And if that happens, I would be waiting for this retracement or pullback to join those buyers and go long. Okay. Again, this is the daily time frame. Now let's go to the lower time frame and see what's going to happen or what's going on right now. So what's going on right now is just look, a pin bar. That is a beautiful candlestick. So that candlestick is telling me, yes, this level over here, look, this level is an important resistance. And now the market is having a reaction to that resistance. Now the price is just creating a little bit of a pullback, right? A little bit of a reaction. I cannot make money with this type of reaction. Remember, not in this time frame. But what about the 30-minute time frame, right? This was a clean bearish engulfing candle, right? So let's say that we had a pullback that would have been a 12 pips take profit, right? So maybe that reaction in the lower time frame is gonna cash out for me, is gonna create some profits for me, right? That would be nice. That would be very cool. So that's why we have to make sure that we draw our kill levels in the daily and then the 4-hour time frames. So again, we were in the 4-hour time frame, and this looks like a pin bar, and the price is just having this little bit of a reaction, right? Now what I'm gonna do is I'm just gonna be waiting, right? Is this gonna push the price all the way up? Look, this 4-hour candle just started like 23 minutes ago. So now this current 4-hour candle can be another pin bar just like this one, and can come all the way down, right? So from here I just cannot do anything, right? I cannot do anything. I'm not gonna buy, I'm not gonna sell, right? Because I need to know exactly what's gonna happen, and I just need to wait for that confirmation to happen. So for example, if I have this breakout to the upside, the breakout of that resistance, that's the confirmation that I'm looking for, right? So if that happens, I'm gonna be waiting for this pullback or correction and the rejection of that level. Then I would join those buyers. Okay, so I'm gonna join those buyers here, or I'm gonna join those buyers here, or I'm gonna join those buyers here. All right, that's it. That's all I gotta do. I just gotta wait. I already made my analysis. It's already clear for me. I already know what I'm gonna do. I already know what I'm not gonna do, right? Which is what traders don't do, right? Traders are not willing to make their own freaking analysis. They just want to make money. They just want to be able to see their money increasing in their MetaTrader terminal, right? Which is completely wrong. You gotta make your analysis. You cannot depend on signal providers. I do provide signals, but believe me, you cannot depend on signals providers. You gotta depend on your own analysis, on your own knowledge, your own ability to trade. If you know how to trade, you will know how to be rich. Remember, if you know how to trade, you will know how to be rich. Now, if you dedicated, I don't know, like 20 or 11 or I don't know, 13 years in the school, why wouldn't you dedicate a couple of years to actually master this skill of trading? Okay. Okay, so how to know fake breakout? Okay, that's a very, very good question. That's a very good question. Okay, so how do I identify fake outs or false breakouts? Let me show you guys one false breakout. Look, this is what I was talking about. You see, guys, this is why I was not gonna sell down here. Can you see that? That's the breakout that I was talking about. So we had the breakout and the price is just gonna keep pushing up, and I'm just gonna be waiting for that opportunity to go short, right? But for now, I'm not doing anything. Okay, so how do I identify false breakout? Look, this is a false breakout right here. Can you see it? If I go to the 1 hour time frame, it looks like a wick. But in the lower time frame, it looks like a breakout. Look, if I go back in time, look, this is an important support. And then I had this breakout to the downside, and then I had this bullish engulfing candle. So I would have thought, okay, this is a massive entry. This is a morning star pattern, right? The price is just gonna go up. I'm gonna buy here, and I'm sure many people bought, right? I'm gonna buy there. This is gonna be my entry. This is gonna be my stop loss, and my take profit is gonna be in the next resistance, which is this one. All right, this is more than 2 to 1. This is my trade. I'm gonna open that position, right? I'm pretty sure many people made that analysis, and then what happened was this, right? The price came straight down afterwards, right? The price just came down. So this one is a false breakout of this yellow line of that previous support. That's a false breakout, a fake out. And if we take a look at it in the 1 hour time frame, look at this. It's a pin bar, right? It is a pin bar. So how do you identify those false breakouts? That's very straightforward. First of all, you cannot you cannot predict false breakouts. Okay? You cannot predict false breakouts. If you want to know how to predict false breakouts, that's not gonna happen. Okay? That's impossible. But what you can do is you can learn how to trade breakouts. Let me tell you how. So for example, we have, I don't know, some type of structure, something like this, right? Something like that, right? So we have a key level over here, a key level over here, right? And we have this. So here we have a breakout of this previous support, which was resistance, right? And then I would think, okay, this is a breakout. I'm gonna join those buyers and I'm gonna make money to the upside, right? So that's a breakout. Now, this one is not a breakout until I see a confirmation. So what's the confirmation that I'm waiting for? So if you're gonna open an immediate trade after the breakout, you're just gonna increase the probability of losing money because it's very likely that is not gonna be a breakout. I mean a clean breakout, right? So for example, let me draw for you. This is gonna be something like this. You have a breakout with a candle like that looks like that, right? And a strong candle. You believe, okay, the price is just gonna keep going up, right? And then what happens is that the price comes all the way down with a candle like this one, right? And you lose your money, right? Because the price is just creating more candlesticks to the downside. You lose your money, right? So how can you identify if this is gonna happen? Dude, you cannot. Okay, you cannot. So what you can do is you can do something like this. You can wait for the price to create more candlesticks like these ones. Look, something like that, right? Something like this. And then when the price touches that broken level again and provides you with a clean candlestick pattern like a pin bar or something like that, rejecting, listen to this, rejecting that broken level, then you can open your position because that's not gonna be a false breakout. Make sense? Does it make sense, guys? Because this is a very important principle in trading, very important one. Okay, you cannot predict, but you can increase the probability of the breakout if you wait. I think that's the problem, that people don't want to wait. I think that's the freaking problem. They just don't want to wait until the price creates the pullback and rejection of the broken level, right? So this is the broken level, right? Here with this candle, we just needed to wait a pullback and rejection to go long. That's it. So if you don't want to lose your money with false breakouts, just wait for pullbacks. That's it. Okay. All right. I hope it makes sense, guys. I hope it makes sense. Now let's move forward. So we were discussing what's that? Okay, we were taking a look at USDCHF now. Okay, the price is just going up, and I think it's gonna keep going up here. I think this is just gonna keep going up, and it's only gonna have a reaction until it has touched this yellow line. Okay, so for now I'm just waiting. I would be looking for buys, immediate buys here, right? I wouldn't be looking for sales now. I would be only waiting for sales until we have a confirmation of sales, right? A clean breakout candle or a clean candlestick telling me that the price is coming down. Okay. Look at what happened to New Zealand USD. What am I gonna do here? Nothing. I'm not gonna do nothing. Okay. Again, because I'm waiting for a clean breakout. If the price breaks above and provides that specific rejection, then I'm gonna go long. Okay. Nothing else. Question. I like to enter trades on the week rather than waiting for confirmation. I do this so I can have a really small stop loss. Is that a good trading practice? Well, it depends. Well, in reality, I do not trade like that. My trading approach is more a conservative approach. Okay, so I do have a conservative approach. I want to take care of my money as much as I can, right? So I personally believe that rather to have this aggressive method or aggressive approach, I rather to wait a little bit more if I can increase the probability of the setup. Because more than risking money is about making money. So in this case, I only trade for a clean, rejection of the broken level. For example, look at this. This is GU. Look at this momentum. This momentum is massive. These buyers, they really push the price up. Can you see that? That's a massive momentum. Incredible. Now the price created this resistance, okay, which is normal, right? Okay, those sellers are pushing the price down now in this with this pullback. Those buyers, they took profits or they are taking profits, causing the price to come down. Now, what I'm going to be waiting for is I'm just going to be waiting for a candlestick pattern that looks like this, right? I think that would be nicer if it's green, right? Or something like this. Let me show you guys another very, very profitable candlestick pattern. Something like this, like a regular candlestick. And then I have something like this. A bullish engulfing candle like that. So if something like this happens, I'm gonna open a buying position here. Okay? If something like that happens or something like this happens. So if I have those type of candlestick patterns, then I go long. So for example, look at this candlestick. This is a powerful candle. So many people would have opened a position right there, okay? Something like this. Stop loss below the low of the candle, right? Or below, sorry, below the low of the previous candlestick and take profit. I don't know how they put their take profit, but I don't know, something around that. Anyway, I don't trade like that. I do not trade like that because yes, this candlestick is a very strong candle, but also that candle, I mean the next candle could have been a candle like this one. Let me show you. Could have been a candlestick like this one. Crank. Right? Something like that. And the price could have come all the way down. Right? So that could have happened. So it's more probable that if you wait, okay, it's more probable that if you wait for for the price to create a rejection, let me just clean my chart. Okay, so it's more likely that if you wait for a rejection of the broken level, the trade is gonna happen. So if you trade immediate breakouts, you can make money. Mm, but again, there is a high risk involved. So that depends on your approach. I have more a conservative approach. Okay. So if you want to trade immediate breakouts, do it. Um, but I personally I do not recommend it. I recommend just the breakout and retest method. Okay, makes sense. All right, guys. So GJ, look at GJ. GJ is just flying. Look at this. Look at GJ in the daily time frame. Look, look at this. Look at this. GJ is incredible. Look, it's just going up. This is from March 20th. GJ is just flying. Okay, look at this triangle. The price was respecting the triangle, right? The price actually respected the triangle, okay? And we had a breakout and we didn't have we didn't even have any type of retracement or pullback. The price is just flying. Can you see that? Price is just flying. So what do we do here? We just join the buyers, okay? Look at this momentum, and this is the daily time frame. So with this momentum, what do? We just make money buying GJ. Just buy GJ. Now let's go to the lower time frame. Look at that. Look, this is another example of what we were talking about. This is our resistance, right? Clean resistance. It got broken, and many people maybe made money with this breakout to the upside, trading the immediate breakout with stops below the low of the previous candle and take profit I don't know how much. That's the problem, that you cannot know how to make your I mean what your take profit is gonna be. And for example, if you're risking 52 pips, which are worth I don't know whatever, like $10 or $20 or $30. Okay, so you have you're risking 52 pips, right? So you gotta make at least 104 pips to make double of what you're risking. The problem is that you don't know if the price is gonna reach this high. However, if the price creates a retracement and rejection right here, let me show you guys how I do it. Okay, how I do it. So if I have a pin bar down here like that, what I'm gonna do is I'm gonna open a position like this one. I'm gonna open my position. I'm gonna put my stop loss below the low of this wick, and then I'm gonna put my take profit of 2 to 1, which is gonna be in this case 80 pips. Of course, the price can reach a lot more than that, but if I'm gonna make double of what I'm risking, I'm gonna be rich in 3 years. Okay, very rich. So this is pretty much what you have to make sure that you follow. You have a clean and clear strategy. How much you're risking, it has to be clear for you. It has to be clear how much you are trying to get, right? You again, I don't wanna say that you can control how much you're gonna make, but you have complete control of how much you're gonna risk. So if you're risking 40 pips, right? If you're risking 40 pips, it's very likely that if you have this type of very tight stop loss, you can make double, at least double, right? Okay, so for example, right here, that's what I'm waiting for. I'm waiting for the price to come down, create a rejection, and then I'm gonna go long. Okay, that's what I'm gonna do here. In the 30-minute time frame, it looks like that. Look at the 30-minute time frame. You see? So I just wanna wait until something like this happens in the 30-minute time frame, right? Maybe it's gonna be later on today, maybe it's gonna be, I don't know, in the Asian session, or maybe that's gonna happen tomorrow. But when that happens, I'm gonna open this position, I'm gonna put this type of take profit, and I'm gonna make my money. I'm gonna increase the probability of my setup. Okay? Alright guys, so look at gold. Gold is just creating a high. I do believe gold is gonna drop from here. It looks very, very bearish now. I don't know, I do not believe gold is gonna keep going up. Gold is very risky, it's a very risky pair to trade, so make sure that if you're gonna trade gold, you risk half of what you normally risk. Okay, because it's very likely that you're gonna lose your money until you create a very prominent, trading plan and method. Yes, I think it's just gonna keep dropping. So guys, I think that's pretty much it for today. This was the first live stream, and I'm gonna keep doing these live streams on a daily basis, right? So on a daily basis, we're gonna be taking a look at the charts. Today we didn't have any opportunity. The price didn't provide any good, trading opportunity. So yeah, anyways, we're gonna be looking for trading opportunities on a daily basis. Okay, guys, so hope you have a great day. Take care and talk to you tomorrow.